caught me with my headphones on there. Hello there, and welcome to hello to all traders. Welcome to our monthly visit to the NFP, Non-Farm Payrolls. So today we have we're back on a Friday today. So from the last month, which was on a Thursday due to the long weekend for the Independence Day in America. So if you did celebrate the Independence Day in America, then hope you have a good time. So going into this month's non-farm payroll, Donald Trump has already stated that it will be a big job number, but he tends to kind of over-exaggerate in most cases anyway. The president does get some sort of indication the night before. However, whether he actually knows anything or has any further details will remain to be seen as the numbers come out. Economists expect to see fewer jobs being added than there were in June. There should be an increase, but not as much as what the previous month had stated. So we will have to wait and see about that. Let's just check. So even though we witnessed two record-breaking NFPs in the last couple of months due to the coronavirus, the concerns re-emerged with the pandemic spreading in the US. So there were realistic fears that the recovery wasn't going to be as smooth as what a lot of people had hoped. So let me just go through the slides and let you know what we're going to talk about today. So my name is David. If you'd like to connect with me on social media, here are my channels. I'm usually quite active in the social media community, posting whenever I can on whatever I can, and also loving to get feedback on what's going on in the markets and fundamentally and technically as well. So I'm very, if you need to contact me about anything, then feel free. It's no problem at all. So just moving on further. So before we get into the nitty-gritty of the NFP, I just need to read a risk disclaimer. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained here constitutes a solicitation for the purpose of the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee not guarantee the accuracy or completeness of information or analysis supplied. So that's that out of the way at least. Okay, so we can jump straight into the expectations, and we can see what was being brought to us last month and what we can expect this month. Like we said before, like I pointed out before, the president did look at a big job number this time. Whether or not it will be a realistic increase on the previous month's job numbers, which was quite positive. Obviously, April and May had the worst in history. They bounced back quite significantly from that. However, we'll just have to look into what's actually going on prior to seeing what the job numbers are. So just bear with me one moment. So, as we can see here, analysts expect a decrease from 4.8 million to 2.2 million. This has actually been revised recently to 1.6 and then 1.1 again later in the day. I did not update it because it could have been changed again. So we're just going to wait and see what's actually what the realistic number is as we go 25 minutes away now. So if we check shortly within the next 10-15 minutes, we'll probably get another update. It's been very, very volatile with the expecting numbers because of the crisis that the world is in at the moment, especially from America, where the pandemic cases are going up and up and up. So it's something to look out for as well. So June's data, the July release, beat expectations by 1.8 million, which was a very good indication. The absence from work point to a less good jobs report. So this is probably one of the only downsides on the expectations that we have. Obviously, America are continuing with the jobless claims that they keep rising to 1 million per week, which is obviously a bit of a deterrent in the US economy. However, the other leading figures are July's release bounced further away from the worst on record, with a stabilizing expectations with the figures that are going to be released. ADP figures were missed expectations quite vastly in the private sector. They did want 1.1 million new jobs, but they got I think it was approximately 160,000. I could around that figure. So it was quite a bad number in the ADP figure. But however, it's kind of to be expected. Markets didn't necessarily move too much based on that because, as I say, it was an expectation in these crazy times of the pandemic. So as we move on to the continued expectations, so if you look at the employment rate, the expectations are optimistic at 10.3%, which is quite a good figure. As I say, this is all leading back to the previous months where we've had such bad degradation on all figures around the world. But with the US being one of the largest economies in the world, it does take its toll on other currencies and economies as well. So in July, analysts had estimated an unemployment rate of 12.3%, beating expectations on 11.1%. So again, something to be a little bit upbeat. And then we come to the downbeat earnings. The hourly earnings fell by 35 cents. Previous month was downbeat too. So we're looking that the average hourly earnings are going to be probably a little bit worse than they have been. More and more people being out of employment. Those companies that can employ people maybe begrudgingly doing so, and in doing so, obviously giving them less of a hourly earning due to their own companies obviously struggling as well. So it all kind of comes around in full circle. So wages are expected to rise at 5.3% year on year, above the previous month's figure. So this is something positive again. However, on the downside, the previous month missed expectations and there was a decrease as well. And if we look at the latest CPI inflation, this increased by 0.6%. But this obviously, after the worst unemployment record in history of the last couple of months, it has a long way of getting back up to where it could be again. Okay, so as we go on to our leading and lagging indicators, I'll just give you a little brief on that. So. So basically, the lagging indicators are the ones that they give us an idea on how the economy is doing based on the previous data. These obviously come out in the month leading up to the NFP. So you have ISM manufacturing, job cuts, jobless claims, ADP. We had that recently. It's at the end of every month. Consumer confidence, and so from the University of Michigan. So these are all kind of showing us what direction in the shorter term did. They don't necessarily always move the market because the leading indicators are the ones that are usually going into more of a projection on how the market is going to be. It's more shorter term, and it seems to move the markets a lot more. Obviously, the examples we have here, treasury yields and equities, and crude oil prices. Obviously, crude oil prices are always in the news recently. Yields are in the news quite often, equities as well. For example, if yields are up, then it's indication that expectations that news will be positive. Equities at the moment are, the Nasdaq in particular, this is at record highs. The other indices are doing quite well as well. The technology sector, companies like Apple, Microsoft, they're all going very, very well, pushing the indices even higher. So it's a very good indication. Oil as well. This has been since the start of the pandemic. It's been soaring quite a lot. So these are indications that, as we can see, when oil prices are up, market expectations are somewhat positive as the boost in inflation raises prospects for higher wages. So there's a lot of factors to take in to seeing where the NFP will take us. What if it is a performing NFP, or if it's a non-performing NFP? We can see what, based on the lagging and leading indicators, based on the figures that we've had previously and the figures going forward, what we can come to expect, and just give us a bit of an idea of, not only in the next, let's say, hour or so, but in the next 24 hours as we go into the weekend as well. Obviously, a lot more news comes out over the weekend when the Forex markets are closed. When the markets are closed. So we can see what's probably going to happen from there. So what I'm going to show you now is our table that we created, just to give a little bit of a broader perspective of what was positive and what was negative on our indicator list. So as you can see straight away, there's 1, 2, 3, 4, 5, 6, 7. There's 7 against 6. So there's a little bit more negativity in the market than there is positivity, but it's not by far. And the previous and forecasted, the previous and the current figures for these indicators show there, a lot of them, there isn't much divergence. Obviously, core retail sales is quite a big one. That's been changed. Just looking through them now with you. So yeah, jobless claims and ADP. These are quite substantial as well. So again, just looking for what we can expect. And just going through, I'm just looking at the charts now actually, just to see if anything's moving. No, there's nothing moving at the moment. Just waiting for things to happen. Still just over 15 minutes to go. So again, we'll just take it slowly. No need to rush. It's going to happen. So we're just going to have to wait and see. So yeah. So basically, choosing the best pair to trade. So at the moment, what we've seen over the last couple of months is a lot of economies, governments, call them what you like, keeping their base rate unchanged due to the worry or the fear or whatever you want to call it of economies failing to recover or slowly recovering or not recovering at all. So a lot of economies are staying put with their base rates. We had the Bank of England base rate a couple of days ago. They indicated at 0.1%. Which is probably going to stay that way until at least 2021. A lot of the other economies have stated that they will probably keep their interest rates at the same level. As I said, a lot of them are a little bit afraid to change it, be diverse, just in case something happens. And we get another spike, jobless claims, call it what you like. We've seen everything these last 3 or 4 months, so nothing else is surprising that the interest rates are so low. So what we can see from the table is that Switzerland has obviously the most negative, and you have New Zealand, Australia, Canada, and the United States. Still in a positive. The UK, as we just talked about, is closing in on the zero, and Japan is just slightly under zero as well. So if you were to, let's say, trade the US against the Swiss franc, it would, and if the NFP came out as a positive, then this would be a good buy position for the dollar. So these are just little things to look out for as well as we go into the NFP. So as we go to the next slide, so this is the this is to show what currencies are doing well on the strength factor. So wow, as we see, we've got a few currencies that are not doing too well: the euro, the pound, the Swiss franc, the Kiwi, and the Danish kroner. Obviously, the Danish kroner is kind of a minor, so we'll focus more on the euro, Swiss, Kiwi, and pound. So we're seeing a very strong dollar. Yen is doing well. Canadian is also not favouring too bad. So it's, you know, the reason I'm showing you this is because it's a very important factor that's good to take in just before the news release. So basically, if you have to see what's got the biggest divergence. Basically, so the biggest divergence at the moment is everything against, well, the Canadian, the Australian, the New Zealand, and the United States against the Swiss franc. This is probably the biggest divergence, as you can see. So if the report is positive for the dollar, like we just spoke about, then we should see prices moving in favour of the dollar against the Swiss franc. So it will be more of a better buy in that case. In contrast, a negative report would see you know, trades against the United States dollar. So this is just something to keep in mind as well. So yeah, so at the moment, I updated this about 10 minutes ago, and it's showing the very weak dollar, Swiss franc, Kiwi. So these are things to look out for if the results are in favor of the dollar, and if they're, you know, not in favor of the dollar. So at the moment, the projections are that there will be numbers, high numbers for, well, not high numbers, but there will be a good report. How good it will be remains to be seen. So we're going to just keep an eye on that and see what's going to happen. Just checking again for any movement at the moment. Okay, brilliant. So one last thing before we actually go into looking at putting in some levels and some good good trades, where to put them, most importantly, just run you through a few things. So like anything, you know, when we're trading, avoid trading during the NFP if you're not comfortable. The NFP is volatile. It's you know, fluctuation of price movement in literally in a few seconds can obviously give you slippage. It can obviously not give you the prices that you want due to the reports, or due to the numbers that are out. If we get a very big, let's say we get a very big jobs report, something that's not expected, we could see a big move in the market, and when you want to close positions or you want to try and put in a take profit or stop loss, it might be missed because of the volatility and the fluctuation in the market. So this is something to look out for as well. Obviously, needless to say, stop losses and take profits with your risk management is detrimental to your trading. Don't risk more than what you can. You know, bypass emotional hurdles. That's very important. You know, when you start trading, you have to make sure that, you know, the equity that you have, you can maybe afford to lose. And if you want to put in certain stop losses and take profits to mitigate your risk, then this is something that you should also do as well. So, you know, it's very, very important. Close out all positions. So again, it goes back to the volatility in the market, making sure that you know, you don't risk more than what you need to, and you don't also go into the market when it's too heavy. So, you know, too much risk to lose, basically, on a volatile fundamental news outlook. So, and the rest of them is just a general overview, let the markets calm down before entering the trade. What you might want to do is when you see a big movement in the market, maybe you might want to wait for a retracement. So you can, if the market moves up 50, 60 pips, there's also always the added incentive that the market will come down 20, 30 pips at least. So you can obviously put in a trade, put in a stop loss and take profit, making sure you're not risking too much, just to see and test where the market's going to be. There's also, there's no worry about just testing the market a few pips, 10, 20 pips on a small lot size just to see where it's going to go. And obviously, again, you're not risking too much of your equity. Post-data release is also very, very important. As we go into the NFP, there's lots of speculation about what it's going to be. We have many people from around the world speculating, it's going to be this amount, it's going to be that amount, this is what the market's going to do. People can only speculate what it's going to do until the data is released. So based on that, the post data release is also really, really important, so that you can see just what the market can bring you for the next NFP or the next big fundamental news release. It doesn't have to be the NFP, it could be anything else. So it can be, as you go into a direction, make sure that you don't go too much in, and you can just play around the market. It can be good to you. And then obviously pay attention to the divergence between actual and consensus figures. So this is very important as well. So if we had an estimation of, let's say, 1 million new jobs in America, and the estimation is 1,100,000 or a bit less, then this isn't really a significant number that's going to move the market. So what we were seeing before the coronavirus is the non-farm payrolls were usually non-performing payrolls. So in that sense, it would only move probably 20, 30 pips, which is really not that much in such a high impact fundamental news release. Probably 100 to 150 pips is considered more likely to move the market, but 20, 30 pips is not really much. So this is what we just disclaimed. Gaps of 20 to 30k are not considered much effective. So this is just something else to look out for as well. So what we'll do is we'll just run into some technicals quickly. So I've just brought up 5 pairs that will probably be looking to get into. So I'll highlight the euro dollar first. So what we're going to do, we're going to go on to hourly chart just to get a little bit of a short-term perspective. So what I'm seeing here is we've got it's trading at just over 1.18. We've seen it move up. This is probably a good point, 1.185. This is a good entry level, and we're seeing that 1.189. We saw this false break yesterday. And then we saw a few days ago when it went up to 1.19, and we see it come down. If it does get up to this level of close to 1.189, probably close to 1.19, I would say, it could come back down. So based on the previous data that we've got. So as we go to this level, we could see a possibility of a good sell position there, but it will remain to be seen if we see the NFP figures, because that's obviously 90 pips away. So a 90 pip move would be quite good. However, it's probably a bit unrealistic for an NFP in one go. So we'll see over in the next 15 minutes post-release, and then we'll go from there to see how it's going to be. On the downside, obviously we've seen some support here. 1.18, just over 1.18. So we'll bring it down to about here. If it does break this section here, we could see it come back down, and then even further as we've got these supports here. But yes, this is a good entry point, and this as well. But we won't need to delve too deep into euro dollar, because we've got some good levels there. So we'll go on to the pound dollar. So pound dollar, this has been bearish for the last 24 hours. So we're seeing it move back down again. Again, we've got this spike here that we witnessed recently. I'm just checking the charts again. So again, we are seeing on the downside these kind of levels. This spike was on the 5th of August, so a few days ago. So there we had a bit of a false break and then it moved up and we saw this position here. So again, if it does maybe come down to the 1.305, we've seen some further support here, which is a good level as well, and then maybe here as well. So this is a very good level because it's a 1.30, good psychological level. And on the upside, again, we've seen it quite bearish for the last 48 hours. So again, to get on this kind of wave, we're looking at probably roughly about here, maybe a bit further down. So let's just put a Fibbo in here just to see how it's going. So yeah, from the top to the bottom, yeah, we're kind of seeing these kind of levels. So there's a bit of a confluence line there, so a convergence. So yeah, yeah, it looks like, yeah, it looks about the same. Okay then, so we'll quickly go on to the dollar Canadian. We've also got some Canadian news coming up as well, so it's always interesting when all the markets, all the major markets are moving. So dollar Canadian, make this a little bit bigger. So again, as we go down, so this has been a bit bullish. Now it's got a bit choppy in consolidation now. So 133.4. So of course we've got this level here, 133.7. It's getting a bit of resistance around this level. So this would be a good level as well. Obviously we've got this V-shaped pattern forming at the moment. So again, the next level could be, if it breaks here, it could push up to here. This would be very interesting if it does. I'll be definitely looking out for this during the Canadian. So let's just see. That's 40 pips, including this. So it is realistic depending on the news. Again, we'll have to see. The dollar Canadian, the dollar Canadian pair is usually quite a big mover when the Canadian news is released at the same time as the NFP. So we'll definitely have to see that. Just waiting now for, let's quickly see what time we've got. Okay, we've got another 2 minutes, approximately 1 minute. So just waiting to see. Yep, just 1 minute to go. So we'll just see what's happening with that. I'll just make sure I've got everything going for the NFP results. Okay, so as we see the next ones, we'll just go through Kiwi quickly. And again, we're going to see, again, it's making this shape at the moment. So we're seeing it come down to this one, to this level. And let's see, the data should be pretty close to being released. Just another minute or so. Okay, and here we go. So put it on 30 minutes just to get a little bit better perspective. So US July employment rate falls to 10.2%. So US July payrolls rise to 1.76 million month on month, and the estimated was 1.48. So it's beaten estimates, and that's why we're seeing a bit of a strong dollar at the moment. So roughly about 20 pips so far. So US July payrolls rise from 1.76 million to 1.48 million. So we haven't seen, like we were saying before on the presentation, we're not exactly seeing significant mind-blowing figures from what the estimate was and what the actual figure was. So we're not seeing much of a move in the market at the moment. Obviously, 20 pips on an NFP isn't really something to shout about on the euro dollar. So we're just going to wait and see what is going to happen. So we've touched this line here, the first one that we put in, so the 1.18, just over the 1.18, and it's bounced off that and gone back up. So now we're going to see if it starts to push up to this 1.185, which will be interesting to see. Again, for the pound dollar, we've seen that it's almost hit this Fibonacci level, and it's gone back up again. So it'll be interesting to see if it hits this next one at 1.3106. The Canadian has, at the moment, going down to this level. It's taken a little bit of time. We'll wait and see if that actually does anything. I'm just going to get the dollar yen chart out. So I'll put it down to the 30 minutes just to see how much it's moved. So again, 23, 24 pips. So US July jobless rate fell from 10.2%, estimated was 10.6%. So obviously a little bit of positivity for the American economy, but unfortunately not something to shout about. So yeah, the increase to 1.8 million. So interesting stuff. Let's check the gold, because it's been a topic of, well, a big topic for the last few weeks. Topic of conversation. So it's in a little bit of decline, probably on the back of the dollar strength. So that's $12, but again, it's kind of reversed and gone back to probably where it was just before the NFP. So let's take a little bit more of a focus on the euro dollar. So it's starting to fluctuate a little bit more now. It's pretty much retraced fully back to where it was in the beginning, completely now. So it'll be interesting to see if it makes another attempt for this support level, or if it will start pushing up further into the next level. Obviously, due to the pandemic around the world, the NFP seems a little bit insignificant in some respects. because a lot of investors are turning their attention to other geopolitical events, such as the obvious one, the elephant in the room, let's say, of the pandemic. So when the NFP comes along, it's not exactly a big surprise if the markets don't move as we, let's say, have seen them move in the past. So gold has pretty much retraced completely. We've seen a bit more of a spike on the dollar yen now, but again, it's pretty much gone back. It's kind of being pulled back down a little bit. We'll just expand that a little bit. So, I mean, the levels that I would look at here, we've got the obvious one, where it is at the moment. The next one would be probably the double top, which has actually found some resistance a few days ago. So this was a false break. This may be another false break, and we could see it move back down now as we go a bit further. So this one, so if we take from this example, this one over the course of a day fell 50 pips. So we could see another move down to 50 pips. Obviously, it will need to break probably these areas first, and maybe this area where we've got another kind of a little false break as well on the downside. So if we can get past the 105, let's say 50 psychological level, we could see it even push further down to these new lows that we've witnessed earlier in the week. So this will be very, very interesting as well. So just monitoring every chart now just to see if there's any kind of flare up as we go into the first 10 minutes post NFP. It'll be interesting to see if we've got any kind of late comers into the market to kind of start moving the market and maybe get some irregular spikes. So this will be interesting to see as we go in. So dollar Swiss, like we said before, it's kind of like pretty much retraced 100%. So is the pound. Gold earlier did as well. So, and the euro dollar. So we're just waiting to see if there's going to be a little bit of a breakout in the next 5 or 10 minutes. We've got the analysts now talking about what the what this means for the US economy. The main thing going into the rest of the year, I mean, we forget that, you know, it's August now. These are the July figures, obviously. So we've got August, September, October, November, December, only 5 months left until the end of the year. And more importantly, there's only 3 months until the US presidential election as well. So within these next 3 months, there'll be a lot of tit for tat. There'll be a lot of, you know, fluctuation in the market, depending on if there will be a realistic Joe Biden presidency or if there's going to be another 4 years of Donald Trump. So this will be very, very interesting. We've also, if we just take the dollar yen, as we can see, it's trying to attempt to go back up to this double top at the moment, but it's not really having that boost. So it's really got this kind of support at this level now, just dipping down a little bit. So it'd be interesting if we can break this line again, this level, to move back up to the next target of 105.8, or as I said before, to fall back down if we can get below this kind of this target of this support. Then it will be interesting to see if we can keep going, and that would be a good sell position if we can get through this this period here. Gold, on the other hand, we'll just expand this a little bit. We can see that, as we said before, $14, $15 in retrospect of what it's been doing in the last couple of weeks, $14, $15 move during the NFP isn't really, nothing to shout about. It's not really significant. So we can expect it to probably retrace and go back to being in consolidation around these kind of this kind of area. It did obviously break through this spike, but it's retraced, so there's a little bit of a false break. So if it can break out of this kind of zone here, this $17 zone, so 2047 to 2064, let's call it $20, just to keep it a bit more round. Just move this down a little bit. So if you can break out between these particular lines, we go for fresh highs here, or the possibilities are endless on the support as we go down. We've got this support here and this one, and of course this was only at the beginning of the week when it was just under 2,000, so there's a lot of potential for it to start moving on the downside should the US dollar gain a little bit of strength. But as we can see here, we're seeing a little bit of a push on the upside to the euro dollar, so this attempt here has pretty much been cancelled out now. And we can see the pound dollar, again, not much in the way of trying to attempt to start pushing upwards in that respect. And the dollar yen moving downwards as well. I'll take a quick look at the Aussie dollar while we still have time. So again, nothing in the way really of a significant move. The Aussie dollar pretty much has been trading, if I put that up to the Kiwi dollar, what are we on? We're 1 hour, 1 hour. So we haven't really seen too much in the way of a significant move, but for the last couple of weeks, the two pairs have been trading pretty much identically, obviously at different prices, but they've both broken a bit of a psychological barrier, in the sense of the Aussie dollar has been trading above 70 cents for a while, then 71 cents, and then it made its 72 cents mark in the middle of the week. And the Kiwi as well has been trading above the $66 66 cent zone as well, but it looks to be coming slightly back down, but it has a bit of a way to go before it falls through that psychological hold. So as we see now, the dollar yen has pretty much started to fall back downwards as we come up to 15 minutes after the NFP, so a bit of a significant time. And the euro dollar is just kind of readjusting itself in the sense that when the NFP was announced, good figures for America, obviously, to be in a positive rather than a minus, which it has been in the last couple of months. So that's why we saw a bit of a push, and now it's realizing that, the figures weren't really that symbolic, nothing to shout about really. So now the euro dollar started to push up a bit. Investors are realizing that the figures could have been better, and the same with the pound dollar as well. So very, very interesting. So like we said before, we're looking for this kind of target here, the 1.185, very, very psychological. And also it's at the top point where we had the last spike yesterday, and then we had this drop. We had this drop a couple of days ago. We had the attempt to push back up, but it hit this resistance and it fell back down into this zone here. So we're just pushing, waiting for it to push back up a little bit more. Same with the pound dollar. And as we go across the board, again, gold, it's trying to push back up. We gave it this little region of 2064 to 2044, and we'll see if that seems to break anything at the moment. The dollar CAD has been a little bit disappointing with its movement, 20 to 25 pips. It has in the past actually done 50 to 60 pips just on the Canadian employment news, which, as I said, is released at the same time. So we're just waiting to see now. Just move this over a bit. Didn't realize. Okay. So yeah. So what we can expect for the rest of the trading day, before I leave you, is the fact that the euro dollar is looking like it's going to probably hit this kind of area, push up. If it does, we can see it exceed that level. Excuse me. And the same with the pound dollar as well. The pound dollar has been very bearish for the morning. It needed a bit of news to kind of wake it up and to start pushing it back upwards. So we've had that at the moment. Gold, on the other hand, it's looking like it's probably going to get to that level of 2064, and then we'll see what happens from then. As I said, the weekend brings quite a lot of fundamental news, geopolitical, especially over the weekend, and we're going to see more of that in store. As I said, as we have the lead up to the presidential elections, and more information comes out about the pandemic. We've witnessed today that France might be the next country to stop its air bridge to the UK and to other countries. So more significant weight on the Eurozone itself. What will this lead to? We'll probably find out on Monday. Just looking at the yen again, now it's dropping. So as we said before, if it goes down to this psychological level, 105.5 approximately, we could see this break, and then to keep it falling even further. So yeah, very interesting times. We'll just wait until the next couple of minutes are over, just to see what the realism is for going forward. So I'm just checking some other levels now. So let's take another look at the dollar Swiss. So again, we see a bit of negativity on the dollar Swiss. So across the board, it looks like that the dollar is kind of feeling a bit, let's say, roughed up by the other currencies. It did start off positive, but now it's kind of going into that territory like it has been in the last couple of weeks. So if we expand the euro dollar, let's just go into a daily chart. So we see this support here. It's actually in the middle at the moment, and then we see this resistance here. So if we can break this or this, let's take this one away so it's a little bit more clearer. So if we can get out of this zone, what it's in at the moment, we could see another attempt at fresh highs, the 1.19 or even the let's see, yesterday's high of 1.1915, and then we've got the downside as well. So we're looking at about 100 pips. It's easy to do in the course of an evening session. Obviously, once the NFP is done, if there's no further news releases, then a lot of traders start their weekends early. They don't hang around too much after, such a hectic week. But as we go into Monday's session, you know, a 100 pip move is nothing really in this day and age. So again, we're seeing the pound dollar kind of pushing up to this Fibonacci line here, and then the level that we placed earlier. So around this zone of 1.3110, 1.3111. So it's looking likely that it will probably reach that. And again, the Japanese yen looking bearish on the candle. We'll see if the level gets down to there. So interesting things to look out for the rest of the trading session today. And then just keep an eye on any geopolitical events over the weekend. We're expected to see what gold can bring next week, if the dollar is going to keep its free fall at the moment. The dollar index has obviously been affected as well. The US indices have been on a high. However, this could change with the data that we've had now. It looks like some of the let's just take a quick look at at one of the indices, just to give you a brief outlook. So let's take a look at the Dow just quickly. So again, a little bit of negativity on the Dow as we've gone into it, but depending on how it's going to affect each sector, where the jobs are specifically, the hourly pay as well, we're going to see these indices being affected. I'm just looking on Bloomberg now. It's looking like all three of the indices are just trading a little bit less on the day. So if we look on the daily, it's just kind of got that doji there. So it'll be interesting to see if it just does keep falling based on the news. So a lot of things to look out for on the weekend, and Monday brings its new week, and we will go from there to see what's actually happening. So I'll leave you with the indication of, like we said before, the euro dollar moving up a little bit. Let's just get rid of this. Sorry. So yeah, the euro dollar moving upwards, the pound dollar moving up, and the dollar yen specifically just kind of like hitting this zone. And then the gold itself, we'll see how that's going to go in the next until the trading session ends in approximately 7 or 8 hours. So thank you very much for joining me today. It's been a pleasure to go through the NFP, and we will commence this time next month approximately. So until then, have a great trading session, and we'll speak soon. Thank you very much for joining me today. Bye bye.